Hello, and welcome to Track Your Dividends. In this video, we will be looking at two slightly different dividend investing scenarios in order to demonstrate how different ways of investing in dividend stocks can yield drastically different outcomes. For both of these scenarios, we will be using a diversified portfolio, and we will need to make a few assumptions about said portfolio. The first assumption is that this portfolio will have a 6% appreciation per year. Next, this portfolio will also have an annual dividend yield of 4%, and our final assumption is that we have an average dividend growth rate of about 5%. It's important to keep in mind that when trying to come up with your portfolio, that you look for a few good long-term stocks that will continue to grow their dividends, rather than lots of average stocks with little to no dividend growth. A great example of a very strong stock that has been growing their dividends for a very long time is Realty Income Corp. We actually did a full analysis video on them not too long ago, so if you're interested in learning about their stock, make sure to check it out. So, to begin, in our first scenario, we invest $1,000 into dividends and leave it for 25 years to compound. Looking at the scenario, over the time we left our portfolio to compound, we would generate a total of about $14,000 from dividend earnings and an estimated $9,000 from share price. That's a pretty good increase, especially when considering all we did was invest an initial $1,000 and left it to sit. What's even better is that every year we would passively earn $3,000 just from our dividend payments. This is really good passive income. However, we could get so much more if we were to actively invest each year, which is what the next scenario is about. Okay, so for this scenario, we're going to start off the same way by investing $1,000 into our diversified portfolio. However, now each month we are going to invest another $1,000 into our portfolio. So looking at this scenario, after 25 years, we would have made $1.4 million from dividend payments and $800,000 from share price. This is an exponentially larger amount than the first scenario. And even though in total we invested $300,000 in this scenario compared to the $1,000 in the first scenario, the gains from each year's dividend payments are very substantial. With this scenario, you would be earning $300,000 each year in dividends. And $300,000 may still seem like a ridiculous amount of money to invest, but considering that we invested that over the course of 25 years, and we earn that same amount back each year in dividends, it doesn't seem so ridiculous. So why is this? Why does reinvesting each month provide a much larger return? That's because buying more shares using dividend earnings and additional investments, your annual dividends will have a higher payout, and by consistently doing this over time, this payout will increase exponentially. This can be described as something of a snowball effect, where something small builds upon itself, becoming larger and growing again at an even faster rate than before. What's even better about the second scenario is that with the dividend payments coming in each year, you could stop reinvesting dividends and your income would still increase. However, if you continue to reinvest, the snowball or compounding effect would continue to grow even more and become more impactful. So if you're going to do this, make sure to not stop reinvesting earnings too early. Investing early is also very important because you will have more time for your portfolio to compound and accumulate earnings. Even without additional investments, an initial $1,000 would, after 25 years, still yield an annual dividend income that generates 300% more than what you had first put in. And that figure only grows even more. So start investing early, because a small amount now can automatically grow to be worth much more in the future. Thanks for watching our video on how dividends can compound through the snowball effect. How early would you suggest others to start investing in dividends? Let us know any thoughts or questions you have in the comments section below. Also remember to like and subscribe so you don't miss out on dividend investing videos in the future. And remember to check out our website, trackyourdividends.com, so you can easily keep track of your stock portfolio. Thanks for watching to the end of the video, and we'll see you in the next one.